Hey guys, welcome back to Financial Markets. Hope you're all doing well. And so just before we begin, please do have a look at the link in the description. It's a link to the Cash App. Any donations will be very much appreciated. I like to keep this channel obviously free and ongoing, but it's obviously costing me a lot of time and money to create these videos. And so any donations will really be appreciated. Please subscribe, and let's start with the video. So today's video is going to talk about what everybody seems to love in the retail community space, which I don't really know why. And to be honest, I didn't actually know that there was that much love for it until until I left the industry basically, and started realizing when I started teaching a lot of retail investors. And so oh, by the way, yeah, so I have started teaching a lot of retail investors. So if you're interested in sort of a mentoring program or anything like that, please email me. The link is in my I think it was at the about page, but it's basically just sarbitrage9@gmail.com. But just go in the link, go in my about profile, and you'll be able to see the email address there. Anyway, so when I found out about this and I started digging in deeper, everybody seems to love Forex. So I thought, okay, even though I think everybody should start with equities, I'm going to make a video on how to actually make money properly in the FX market. So none of this rubbish where you just want to leverage 100 times and then just try to get a couple of pips and get out. Don't trade like that in the FX market. It's just doomed for disaster, because it cuts both ways, right? You're leveraging that much. If it goes up a couple of pips, you make, so much money that you think that you want to do it. But if it goes down a couple of points, it's the same thing. You lose so much. And so one of the trades that I've been talking about quite often on my channel is the dollar yen trade. And the reason being is because of two reasons. One, the US dollar had a really good year last year, and that was because of a rising interest rate environment. The economy was obviously doing well, and so the dollar kept going from strength to strength. This year, however, the dollar, in my opinion, is going to be stable, or it will go lower. I don't think there's any upside in the dollar this year. And so the reason being is because of the fact that the Federal Reserve has decided it would not raise interest rates this year, and then potentially a rate cut at the start of 2020, which I don't think there will be a rate cut, but that's what the market is thinking. And so the best trade for that scenario is that the dollar will naturally be weaker, because again, they pause the tightening cycle, and secondly, Donald Trump is obviously in favor of weaker dollar, so he obviously tweets out things that basically supports the thesis of having, or pushing out the thesis of having, a weaker dollar. Anyway, so that's the dollar side. And so obviously, when you get a currency pair, you have to look at both of them, because indirectly, if Japanese dollar yen goes down, that means the dollar is weakening, but that also means the yen is strengthening. So you have to understand both sides of the pair, of the currency pair. And so the other side is the Japanese yen. And now, if you've again watched the videos, I'll leave the link in the suggested top right. That I do think that a recession is on the horizon. And so what would happen because of that is that people will decide to get into safe haven assets, and that includes silver and gold, which I'm an avid buyer of, but it also includes getting to a currency pair like the Japanese yen. That's like a safe haven currency. And so I made videos on this in April, and like since then, if you could see, look at that, we've had a really good decline, which has been quite awesome actually. About 2%, and obviously in the FX market, 2% move is huge, like huge. Again, because of the leverage size, but even if you control your leverage, it's still a big position to have. And so this trade has so far been quite profitable for me. But that being said, I don't think it's done just yet. I think obviously we had a quick decline, so there will be some probably gains, just as a way of adjusting itself, not going consistently, because nothing goes down in a straight line. But I think this trade is probably going to be one of a really good one, even as a hedge in your portfolio. And that's what you got to understand is, certain positions, when you take contrarian views, you take them as a hedge in your portfolio. Once they start working, then you could add it and turn it into an actual position. And so the way you should trade the Forex market is this. It's not just through the technical aspects, say, oh, I want to make a couple of pips, look, this is down, this couple of pips, this. Make it a macro call. So come up with so obviously when you're doing your analysis and you're reading and your thesis, if you will, you come up with the decision, you come up with an idea of basically what your thesis is about. So in my case, like I just mentioned to you before I even made the FX call, that I was thinking weaker dollar, And I was also saying recession is on the horizon, therefore strengthen the yen. So what's the best pair to get? The dollar yen, because that gives a double effect. You know, if I get a weaker dollar this year, which I'm expecting, great for me, it will start going down the dollar yen, and then we get even strength in the yen, say the market's good, and then we get even strengther, and so that way it helps me to make bigger gains on that. And so again, these are macro calls, so I'm looking at the economic climate and then digging in deeper from the top and seeing, oh, what things will get affected and how should I play the move. And that's what you should do. A lot of people just literally get into any pair and just try and, you know, swing it off and trade it off. And clearly that won't work, because if you did do that, especially in this trade, I think for the technicals guys, right, once you're thinking here, you're now breaching, you know, one of the high periods that you've had since January. So you would be thinking, okay, the next retracement down a little bit, I'll start buying now because it will go up further. But fundamentals rule over technicals, and that's exactly what happened. It completely didn't follow any technical, and it went all the way down. Obviously, the chart build up to this point was great. You know, it had a gain, a bit of retracement, gain, and then a bit of retracement, and then people will think, oh, okay, another gain, and clearly that didn't happen. And now it's testing levels, which now actually technicals side of things actually looks like to be a short. And so that's the beauty of, you know, fundamentals first and making macro calls, and then allow technicals to decide your entry exit points to an extent. But you have to get an idea of first the economic climate and the way your thesis is built around, and not just trade off of, you know, quick small little pips. It's just silly. Like, you know, I've held this position since around, I think, this position here, so I'm making 1.5%, and now I could get out because I made good enough profit. But I do think that there's a lot more weakness to come in the dollar this year, and also I think there's a lot more strength to come in the yen as well. And so yeah, so that's the way you should approach the forex market, not the way I think people sell it to you about just get 100 times leverage and just go for the few pips and just get out. Because again, remember, it cuts both ways. You know, you could make those couple of pips and make thousands, and you could lose those couple of pips and literally blow up your entire account. And so risk management is important, and the way to understand it and fundamentals is also very, very, very important. So anyway, I hope you guys enjoyed this video. Please subscribe, like, and I'll see you guys in the next one. Bye.